Hello ladies and gentlemen, I'm Joseph Novichkov, Senior Trading Manager with GDM. Today's European session outlook, we're starting with Asian shares. Rose on Thursday this morning as an unexpected rate cut in South Korea and better than expected jobs data from Australia helped to offset the lackluster lead from Wall Street overnight. Now, the Bank of Korea surprised markets by cutting its base rate for the first time in 5 months by 25 basis points to a record low of 1.75%. The move comes on the back of other rate cuts in the region, such as Thailand, India, Singapore, and China, which of course have taken advantage of lower oil prices to ease monetary policy in the bid to spur sluggish growth. In Japan, Japanese Nikkei 225 index accelerated its upswing to finish slightly off the 19,000 mark, which index heavyweights contributing to a huge chunk of the day's advantage. Now, Australia's S&P 200 index widened gains after data showed the Australian economy added 15,600 jobs in February, above expectations of 15,000 increase. The unemployment rate, meanwhile, came at 6.3%, matching market's consensus. The Australian dollar, which, as we all know, has always been sensitive to the data, last traded at 0.7626 to the dollar. This is the big four lenders led the change for the day. Now, Westpac rallied 1.6%, while National Australia Bank, Commonwealth Bank of Australia, and Australian and New Zealand banking climbed more than 1% respectively. Taking a brief look at European stocks, they were rising, extending a 7-year high as gains in miners outweighed a drop in telecommunications shares. Now, the Stocks Europe 600 index added 0.3% to 396.5 this morning. The benchmark climbed 1.5% on Wednesday, the most in more than 6 weeks. As of course, weaker currency boosted exporters. U.S. stocks, they closed slightly lower on Wednesday as equities failed to recover from Tuesday's sell-off on continued concern over dollar gains and the timing of the interest rate hike. Looking at the commodity sector, gold gained 1% this morning on short covering after 8 days of losses, and as of course the dollar slipped from a near 12-year peak. But of course, increasing concerns over a near-term increase of the interest rates in the United States kept the metal under pressure. It jumped 1% to a session high of 1166.30 an ounce, and of course it had dropped for 8 days in a row to Wednesday, when it also reached its lowest level since December 1st of 1147.1. Sentiment towards bullion had taken a big hit on Friday when the strong U.S. non-farm payrolls data stoked expectations the Federal Reserve would end its near-zero rate policy soon. Some Fed officials have hinted that the Fed might act soon on rates. Markets are ready and they're expecting an increase in June. West Texas Intermediate slightly climbed 29 cents to 48.46 after closing the session down 12 cents. U.S. crude inventories we've seen rising for a 9th straight week by 4.5 million barrels last week to 448.9 million. U.S. Department of Energy showed the data yesterday. That was the highest level at this time of the year in more than 80 years. All inventories are expected to increase further. Any gains in price should be short-lived, as oil stocks are forecasted to rise further due to refinery maintenance, and the greenback could continue strengthening against the euro. In the calendar today, quite a bit of important news: initial and continuing jobless claims and retail sales for U.S. at 12:30. 15 minutes after that, we will see Bank of England's Governor Carney will have a speech, and at 14, U.S. business inventories. That's all for me for today. Thanks all for being with us. And of course, take a look at the calendar later today. Important fundamentals. Thanks a lot for watching. Bye-bye.